Well, Janna, thank you so much for joining the Fi Guys podcast. Welcome. I'd first like to start off with you kind of telling myself and the audience a little bit about what got you into both taxes and somehow cryptocurrencies.
Yes. So it's a little bit of a funny story. I started in public accounting, taxes, CFO services, fractional and CFO for companies. I've done that for the last 15 years. I switched over to actually work. I work for the government. I oversaw the State Department's finances and actually met with the State Department CFOs, so per se, and let them know don't do that or do that. Just basically ensuring that their spending is uh, following regulations.
Mhm.
I left that world in 2021 when I was getting NDAs from the government saying, "Hey, here's an NDA," and I said, "No, no, thanks, I'm good. I'm not signing an NDA as a transparent government employee." So when I left the government again, I went back into the public sector, to the private sector, and started working with a lot of clients, businesses. So a lot of fractional CFO services for multiple companies, and then taxes, of course. In 21 is when crypto really entered my world from a tax perspective.
Can you tell us what is it that the government was asking you to sign NDAs over? Are you allowed to disclose that to us?
Oh yeah, because I didn't sign it.
Okay.
um, so during COVID, obviously, I was watching a lot of money being given out um, to states, to state departments, funding, and there were a few issues that I saw when it came to paying out unemployment, when it came to the government using their funds in general, such as paying family members' companies to help them consult on how to handle the pandemic. And I'm not saying little dollars like $146,000 a week, things like that. So, of course, they didn't want me to go out there and tell anybody. I wasn't planning on it. I was never thinking about it. I had my opinions. But then once the NDAs came, the stubbornness kind of took over. And I said, yeah, I'm not signing it. So I actually let it sit in my inbox for about 2 months until they finally scheduled a call. And I said, you know what? I'm not signing it. I know why you want me to sign it, but I quit.
Interesting.
So
So, as you look back on your time when you were working, did you work for the IRS specifically, or what department did you work for that
no,
allows you
so
to
I
oversee
worked
these
for the
things?
Office of Financial Management. So I was a senior, I was a financial consultant. So I oversaw the spending. Um, and so we filed the Treasury report. So we worked with the Department of Treasury, right? And we ensured that, like we filed that, look at it at as the tax returns for the states, maybe. Lots of big numbers, lots of different pages. I had to count the zeros a couple times here and there, um, just to see where funds are being spent within each state. So
So I have to imagine being able to look at the books, you get to actually see the nitty gritty. I mean, you get to be the
yeah,
real accountant. The things that people try to hide. I mean, they were honestly, it
yeah,
sounds like they were
exactly,
trying to
yeah.
get you to just go with it. Like, don't say anything about it. Like, just let this continue happening.
And most people don't say anything, right? Most people don't care. Most people don't see it because they just, you know, cogs in the wheel. Is that how you say it? See, the German
Yeah.
gets out of me sometimes. And I'm like getting those kinds of things wrong. Yeah, and I'm very much not like that. As you'll be able to tell from, when we got more into the crypto world, I'm all about, fairness and knowing what my money is being spent on.
Well, I'd like to get back into the whole government corruption, which sounds like I'm going to put in air quotes corruption a little bit later,
There's
but
lots
I would
there.
love to learn a little bit more about how you got into crypto. What was the transition
Yeah,
there?
so in end of 21, beginning of 22 is when I had a few clients approach me and they said, "How do I report my crypto?" And I had crypto at that point, but believe it or not, I didn't even think about reporting my crypto. It just because I dabbled with like, hundreds of dollars here and there, not a lot. But my clients had a lot more. And when they asked me, I said, "Well, I have no idea." So I went down the rabbit hole And what I did, I had this, like I said, I dabbled in crypto too. I had this Coinbase account that had in 22 about 300 transactions ranging from 17 to 22. Anybody in the crypto world, stock world knows 300 transactions is nothing, right?
Yep.
It's what some people do in a day. So I took that data, and mostly they were very simple. They were buy, sale, sells, or trades, right? So nothing difficult. No NFTs, no, none of that. So I took that data, and I went and I found 13 to 14 different products on the market, right? So crypto tax calculator, coin tracker, CoinMe, Zen Ledger, et cetera, right? Cointracking.io. And I took the data and I put it, I paid for the subscription, and I did the OAuth 2 connection, and I imported all the data. I didn't manually do it. I had them imported for me directly from the blockchain. So
Mhm.
on 300 transactions, 40, 50 a year, you would think that the report I received, they should all be the same, right? If it's just a buy and a sell,
Yep.
it's, you know, wrong. And that's where I remember I did that late at night. I remember sitting in front of it, and I was so baffled because I was like, this should be an easy solution, especially for the data I had. And they varied between 35 to 120%.
Wow.
So exactly. So I can give you an example. So I've been running it since then, and I've kept it consistent with about, 70 to 100 transactions a year. 23, for example. Coinbase itself does the calculations, right? They will tell me on one set of, like, they on their own data, they will tell me you have a gain of $99. I'm like, cool, great. I take that data into the two products that they endorse, that they're shareholders in and they endorse. So talk about corruption, right? But they're
Hmm.
shareholders in these products and they endorse them as well, probably get kickbacks, get, revenue sharing, etc. So I go take the data. One of the products tells me I have a gain of $2,900
Okay.
to
That's a
their
big difference from
$99. Yep.
$90.
Yep. The other one tells me I have a loss of $351.
Where is this discrepancy coming from the reporting side?
So, and that's the interesting part. So, right, I took about, so, but I'm in 23 now, but so I took all of 22 and 23 to really dig down deep, and I went and built APIs to pull the data myself, the raw data, and figure out and read IRS regulations and figure out the calculations myself. Figure out how do I do it myself? Does the data need to be organized for each transaction type? How do you treat it, et cetera, et cetera. So I did it myself, manually calculating it, and trust me, it drove me insane. But when I finally had the answer, I went back to the products and I pulled each product will generate like a CSV report and will show
Mhm.
you kind of what their outcomes are, right? This transaction has a gain, this has a loss. So I compared it and I kind of backtracked it all. So I know what every single product is doing wrong, like their own issues. Some issues are algorithms that they just have internal algorithms that were wrong from the get-go. Some products, they don't pull the data right. They convolute the data because they pull too much data. There's certain data sets that you do not need that will just confuse the system more if the algorithms are messed up. Um, some, and this is a big one, some will not lock previous tax years and double dip. What that means is, and see, I have a hard time explaining it because my business partners always say you get too technical. So I usually have them translate my jargon into easier terms. Um, but okay, think about your regular stock trades. Okay, you
Mhm.
you you trade stocks, and then you get a 1099-B at the end of the year with your gains and your losses. Right now, when you trade stocks the next year, it starts back on January 1st until 12/30. Okay, these products. So let's say you go to these products and you say, I want to have the accounting method first in, first out. Okay, for 2017. Say, great, I'm going to get a calculator first in, first out. And then for 18, in 18, you say, when you're in 2019, you say, for 18, I now want to have highest in, first out. You used up first in, first out in 2017. You used up certain transactions, not all of them. Sometimes you do, sometimes you don't, but you use some up that are now out of circulation. They don't exist
Mhm.
anymore, right? Okay. They don't lock down their tax year and take those those out of circulation. So when you go in 18 and you change your accounting methods, they dip into already disposed of transactions for your 2017. Does that make sense? Because they
It
don't
does.
lock it, they don't get rid of it. So that's one of the bigger issues, right? So if you change accounting methods, it's going to recalculate from the first day of a transaction, but they've already been used up in previous years. Then one of the issues is the features of these products. So the problem is, and I've noticed that, I don't think these products went ahead and actually created accounts with all the exchanges or wallets that they're allowing you to integrate and actually ran some transactions through it that they know 100% what they are, and then imported it and saw what the data looked like. So
To audit themselves to ensure that it
exactly,
was correct.
exactly. So now the problem is, because they didn't do that, they have features, and I like to compare it like this. Let's say you write a $10,000 check to somewhere, and you call your bank and you say, you know what? I don't like that I wrote this check. I know I can't reverse it, but let's remove some zeros and turn it from US dollars into yen. Impossible, right?
Yeah.
However, these products, they import data from the blockchain. The one thing we know about the blockchain is whatever happens on the blockchain stays in the blockchain. Is irreversible. It can't do anything about it. They have features that allow you to change the date, the time, the currency, the fees, the every single aspect of a transaction, and categorize that transaction type into something that might be non-taxable, taxable, whatever it is, right? Because they don't know how to categorize it themselves, because they didn't do those hard steps beforehand. Now, a lot of people have asked me, well, why don't they just go back and fix it now? These products are valued at $2, $3, $4 billion. Can you imagine them going back, fixing it, and now every single report that any user has ever paid for, and their rhetoric saying, IRS compliant, we can protect you, yada, yada, yada. Can you imagine what's going to happen?
Now, you just answered the question that I was on the tip of my tongue, which is, first off, are these companies aware that the information they're
I'll
getting is
get there.
wrong? And then more importantly, is the IRS aware? Because
Oh, I'll
average
get
Joe
there
and
too.
Jane, because average Joe and Jane
Mhm.
who walks off the street, they get some crypto, maybe they bought, they sold, they did some simple stuff. They don't know what they're doing with their taxes. They don't really
Mhm.
understand it, but they trust
Mhm.
other people that if I put this thing into this software, it's going to
Mhm.
give me what I need to give to the IRS, because the IRS knows how much you owe them,
No, they
or at
don't.
least they're going to, okay. How would I say this? The IRS will tell you
They will
what you
tell
owed
you how
them
much you
after.
exactly. Yep.
They
Hmm.
will tell you what you
Yep.
owed them after the fact, and unfortunately, with the IRS, you are guilty until proven innocent. So, how is
Exactly.
Joe
Yep.
and Jane supposed to make it through this shitty situation?
Oh, Joe and Jane are screwed. Yeah. So now let's get into 23. Early 23, when I got this all figured out. And this is an important thing. If anyone who listens has questions and wants validation of what I'm saying, I can give you validation for everything. I'm not hiding anything. I reached out to all the products, including major exchanges that are endorsing these products. And I said, I found mistakes. We figured out what the mistakes are and why, and they're detrimental to your users. I'm going to give you my research for free. Just let me know. Most of them said, yeah, no thanks. We're good. One met with us, and basically we were on there with their tax attorney and the CEO, who couldn't answer questions, and then tried to sell us their product. So he said, well, no thanks. So then in April, May, uh, in April of 23, the SEC got wind of it, and we actually had a meeting with them and met with them and reviewed all of our findings. Now, they were mainly interested because they're getting ready for their Coinbase lawsuit. I didn't really care about that. But they had their ulterior motives. However, we met with them, and their response was, oh shit. We met with 50 of the division chiefs. And again, I have all the links and emails to prove that. None of them say confidential. And I said, yep. And so they sent us straight to the IRS, and they sent us straight to the congressional committees. We met with the congressional committees, went over our research, shared it with them. And then we met with the IRS. And during our meeting with the IRS, we went over all of our research. Two of the products that we audited actually had contracts with the IRS. Those two products actually the worst products on the market. So the IRS already wasted money on those products that are absolutely ludicrous. Um, and the IRS was doing at that point already their own internal audit. So that brings me actually to take a step back. One thing that a lot of people don't know, back in 21, and it's an easy Google, do IRS crypto summons 2021. Brings you to the Justice Department, justice.gov. And a judge signed off on 1,000 so-called John Doe summonses. What that means is the IRS had the right to reach out to privately held companies, some publicly held companies that are not overseen by the government, that don't need any, licenses, etc., that are not, registered, just your regular company, and tell them to give them the US taxpayers info of people who have touched crypto. So they just about a month and a half ago received their third response. Meaning it is going, and I know people think, oh, I use MetaMask or I use ABCD, I have a
Yeah.
cold storage. I'm safe. No, you're not. You bought it somewhere. It doesn't matter if you hold it in cold storage or not, because they don't know that you held it. They don't know anything. All they know is that you had it, that you bought it. If you use anything that is outside of an exchange to purchase it, but you're on a decentralized platform, you will still have to use your bank account, you have to use your credit card, that's all KYC contingent. So they have your names. They have the names of 53 million Americans who've touched crypto. A lot of us don't hold anything anymore. We've gotten that, we've done the craze and everything. And so they were already doing audits at that point, back to 23. And in our conversation, we went over how they're doing the audits, and they said, well, we're doing it wrong. I'm like, yeah, let's stop that then. So they actually, based on our research, stopped their audits in 23.
Well, that's
During
good.
that time, yes, well, they didn't go back and fix what they did wrong, and the people they already got, obviously, because they would have to admit it. But this is the other issue is this. So there's universities that work closely with the IRS. So they actually go in with the IRS, have meetings, advise them, etc. Those universities reached out and we met with them. So since 23, they have reviewed thousands of pages of my research. They finished their review earlier this year and published and agreed on every single step with me. They reviewed and peer reviewed my algorithms, my calculations, etc. So we're the only peer-reviewed product. Our research was also published in text notes, and they actually, again, in 24, the IRS tried to start the audits again. They went to them. The university said, you can't, you still don't do it right. Here's the research again for you to, again, see that you're doing it wrong. They still haven't started the audits back up yet, but because letters are going out again, which is due to the third John Doe summons round coming back, they're planning on doing the audits again. Now, so yes, IRS is aware, right? SEC is aware, and congressional committees are aware. Obviously, they haven't said a word because why
Can
would
you
they?
tell us? Can you tell us how far they can go back to summon you for crypto holdings that you
Indefinitely,
might have done indefinitely?
indefinitely.
So they
So
can go
there's
back to
no
2008.
Yeah. So there's no, I mean, I don't know if they would go to 2008 because 2009, but if there is a tax evasion, meaning you didn't report it, you knew you had it, they have record that you had it, they can call it tax evasion. They can go back indefinitely. There's no cutoff for that, right? Um, so, and also just FYI, and this is worst case scenario, tax evasion charges is 250,000 in fines and 3 years in jail. Well, up to 3 years in jail, right? So that's another fun little fact. Now, and this is the frustrating part, right? The frustrating part is We reached out to all the products. We reached out to the people who are running around here and making billions off of, people using their product, accountants, exchanges, endorsing. So this year we finally compiled all of our findings, and we had our attorneys reach out to one of the major exchanges in this country, sent them a nice letter outlining all the, and nothing, and it was a nice letter. It wasn't threatening. It was nothing. It was really just, here are the issues. There's the due diligence issues. There's your negligence issues. Here's the proof of it. Here are all the issues. Let's talk. Because I don't want to fight them. I want to fix it. And I'll give you the reason exactly as to why I want to fix it so bad in a minute. But unfortunately, within less than 36 hours after they received the letter, they updated their terms of services for the first time in 8 years, saying that class action lawsuits are excluded. Arbitration is mandatory. We're not liable for any tax calculations. We're not liable for any third-party tax calculations. We're not liable for anything we're sent you to, right? So they basically removed, if you don't sign this, we're closing your account down. So
If they didn't sign it, would that be retroactive?
Listen, legally, they can't really go retroactive. Are they going to try to? 100%. Legally, they can't really go retroactive, right? It doesn't really work that way. But my guess is they're going to try at least, or they hope that people don't know enough, especially now that class action lawsuits are not on the table, meaning you have to hire your own attorney, you have to pay for it. You can't just go to a pro bono class action lawsuit attorney who will then take a piece of the pie, right? So that's discouraging as too. How many of the normal people have $5,000-$10,000 retainers laying around for something that possibly is not going to go anywhere? So, I mean, they're not stupid, obviously, but they're also not very kind, which.
So let me ask you this, because gets very scary. If people do sign this, that means that, they worked hard, they made some crypto choices, either positive or negative. They tried their best to file, say, hey, this is what I owe in taxes or don't owe in taxes. And now, due to someone else's negligence, they are on the hook to the IRS, who is going to state to them, this is how much you owe us. And again, you are guilty until proven innocent. What is one to
Yeah.
do?
Okay, so this, I've thought of it. I've thought of it all. Trust me. So this is where the issue comes in. Remember how I told you that beginning of 23, we told all the products, hey, we have the research for you to fix it. You know how I consistently pulled reports for them like quarterly to see if they did anything. September 23, I pulled the reports again for all the products just to see what's going on. They completely changed. They tried to make changes and fix it without telling any of their users that, hey, we made changes. Your data now is about, 30 to 40% different, your outcomes. So if you used our product for 22, 21, 2020, 2019, well, it's not going to match what you reported anymore. And we didn't tell you. We didn't let you know. So yes, if you get audited and the IRS builds something in like a safe harbor thing, like, look, you tried your best. We're not going to penalize you significantly. We're not going to, you tried your best. Show us the reports that you used. You go onto that software, you pull the reports again, give it to them. They say, this doesn't match. You didn't use this. You don't have defense anymore, right? So you can't say I relied on third party because these third parties made changes to the algorithms. They didn't fix anything. I mean, still wrong, right? But they made changes to the algorithms to try and fix it, which they could have done if they would have just taken my research. I wanted to give it to them for free. I didn't want any money off of it because I've watched it during COVID. I've watched it with the ERC credits. I've watched the damage that is being done. Now imagine all these people getting audit letters. And it's going to start with the highest earners and working their way down. But now look at all these people getting these letters. Who is going to defend them? Because you're right. You have to prove the IRS wrong. Now, do I think the IRS is getting it right? No. So, but how do you prove this, right? You can't go to any of the products because they will not be allowed in an audit. I'm telling you, just because of the features. Because if I've done enough audits, especially for businesses, and if you ever try to offer an auditor your QuickBooks reports, they say, no, You can manipulate the data in QuickBooks. You can tell me whatever you want to tell me. Give me your bank statements, things that cannot be manipulated, right? So these products allow you manipulation, which means they can't be used in an audit. So it doesn't matter if you reported with it, it can't be used in an audit. Now, we also audited 53 of the so-called crypto tax expert accounting firms and law firms. We gave them money, 4 grand for 300 transactions, who took it and ran it through one of those products and then gave it back to us for a couple $100s, right? So those people are not going to be defending you at all. And they're going to take, again, 5, 10, 15, 20,000 or more in retainers for in charge you in fees to go and do what? Basically, what they're going to do is argue with the IRS. They're not going to get anywhere if they can't sit there and prove it wrong. You know, they're going to spend hours on there, and they're going to be accountants and tax attorneys who want to do the right thing and are going to try their best. But they're not going to have the ability to do it with what is out there, right? So they're going to be stuck really just negotiating down penalties, right? Now imagine our middle class. Now imagine we have when they're getting down and there's people who made, maybe 10, 20, $30,000 in 19, maybe something here in 24, and they're going to get audited. But let's go back to 19. The IRS's interest rates are ranging between 6, 7, 8%. Okay.
Mhm.
Then there is the underpayment penalty. There's the accuracy related penalty. There's the late payment penalty. There's, possible tax evasion penalty, especially if it was 21 and you didn't check the box on your return and said, yep, I traded digital assets this year, right? So ultimately, those people are going to be stuck with so many, because how many of our middle class people rely on their $5, $6, $10,000 tax return?
Yeah,
Those
they need it.
they won't get them until it's paid down. They won't get those tax returns until they're paid down. Now, if they pay them on a payment plan, let's say they manage to pay, $300-$400 a month. Yeah, that's a car payment, right? They pay $300-$400 a month. That's going to be basically the interest plus a little bit of the tax. The interest is going to keep compounding, right? It's going to take them, 5, 10 years to pay it off if it's significant enough, if there's enough penalties on there, and it's going to destroy our middle class. More so than it has been, but,
Now,
and then,
now I have a question when
yeah,
it comes to all of this. Now it's you're creating a really scary narrative where it seems that everyone is stacked up against the little guy, against the middle class, against really anyone who doesn't know what the hell they're doing.
yeah.
So it sounds like you went to the companies to say, hey, companies, this is the
Hmm.
issue. We guys want to fix it. They all said, F off, we're not going to do
Yep.
anything because we're making too much money doing what
Hmm.
we're doing.
And we
Then
have to
did you
admit
go
that
to
we're
the
wrong.
IRS?
Yeah.
So, and then now the IRS also knows there's an issue. So would the IRS ever decide, hey, rather than us going after individuals, let's go after the companies? Or, because it sounds to me, if I'm conspiratorially minded, that there is almost a goal by the government or by some members of it to hollow out the middle class even more. Am I
Of
off base
course.
there?
I mean, the middle class is it's what's, the middle class is the largest class we have, right? Those people are what, who pick, um, who's pretty much in office, who's, in there, whether it's state specific, whether it's county specific, whether it's, for the country. But, I think it's just, I don't think it's so much conspiratorial. I think it is more, somebody will have to openly admit that they messed up. How many people are going to walk around and openly admit that they messed up? Whether it's the for-profit company or the government, right? The for-profit companies are not going to say it because they can look at lawsuits, and they can, right? Because their promises are all over the place. Accountants that have used it. I mean, and then the government. I mean, do you think the government is going to go and admit that they made a mistake? No. So I think it's more about, protecting themselves from backlash, whether it's, I mean, it's the IRS. Huh? The IRS is not going to go after those companies, right? Once they figure out who's regulating who, that agency is going to go after the companies. No, don't get me wrong. Listen, these companies are usually C corps, right? These whether it's CoinTracker, whether it's Coinbase, whether it's any of those, they're C corps. They have to pay taxes. Now, If they're using the products that are completely wrong when it comes to tax, they're probably not reporting their earnings right, because their earnings are a lot in crypto, right? So they're probably
Mhm.
wrong too. Now, go ahead and go after them that way. I don't care. They make enough money, right? Um, but but ultimately, I think it's mainly it's just pride and it's greed, right?
So
Why they're not fixing it.
so members of the government and members of these companies are willing to let innocent people suffer in order to not have the embarrassment or the black stain of admitting that they were wrong.
I mean, that's how I would look at it. Yeah. I mean, because this is the thing. We've met with 50 of the division chiefs of the IRS. They all know. They know. The attorneys of the IRS know. The enforcement attorneys of the SEC know. We've met with them. We've talked with them, the enforcement attorneys. We've met with the IRS. We have emails with the chief counsel. They know. And I actually have an email begging the chief counsel. I say, do something. You understand how detrimental, and all I hear is, yeah, no, we know, And I have that same with the congressional committees, because and I don't think people understand. I don't think these companies understand the damage that it will cause, because people live in the here and now and they look at instant gratification. They don't look, they don't look ahead. And that's something I do. I look ahead, and I because I've seen it with my clients. I tell them, I said, if you do this now, then that's what you do in finance. That's what you do. You look ahead. You see what's going on, what's going to happen. And and this is the amount of companies that will come out of the woodworks, like with the ERC credits, right? With the earned income, with the employee retention credits. These companies that came out of the woodworks and said, "Oh, look, we can get you this credits." Blah blah blah. They filed fraudulent forms. The money came back. They took their 25% and disappeared. Now the IRS comes back and says, "Hey, those are wrong. You got to pay us back plus the 25%. I don't care if you lost that. You can have that as a write-off, whatever." you know so, and that's the same thing that's going to happen here. There's people going to come out of the woodworks, and all it's going to be is negotiating with the IRS the penalties down, but not actually negotiating if the tax is right. And I tell all my clients, I said, it is I understand that all of you don't want to pay your tax, but there's a way, like there's a legal and right way to pay your taxes, because one thing you have to understand, the IRS is not going to go anywhere. Taxes are not going to go anywhere. This government we need taxes. Do you want to get rid of our military, or are you going to pay them out of your own savings account? What are you going to do? You're going to get rid of the research. You're going to get rid of anything that is government run is paid by taxes. I get, I understand. I don't want to pay more taxes than I have to legally. And that's the whole goal here, right? If you get audited, if you have your crypto taxes, I am not against you paying the taxes, but I'm against you being exploited because you don't have another option to go to get it done right. And that's the whole goal, right? I I never cared about building a software. I never cared about making money. I didn't want to do this. Trust me, I would have sleep a lot better if I didn't have this on my mind. I tried to give it away for free. I talked to the government agency. I talked to the people that could do something about it, and nobody has done anything about it. And people always don't seem to listen very well, but they will start screaming very loudly. We've met with major news outlets who have said, "Oh my God, we love this story. Let's wait until people are actually hurt before we report it." I'm like, well, okay. I have embargoes with them. You know, they're just they want to report, but not until people are actually in pain. Isn't that fun? So, let's not report that there's a bomb under the bus and have people get to walk away from it. No, let's wait until it explodes. Better story, more clicks. At this point, it's so towards the end of 23, when I pulled those reports and I realized that they just didn't fix anything, just made it worse. I said, you know what? I'm just going to build my own. At this point, I'm done. Easier said than done, trust me. We're actually up and running now, and we have we've built something that lacks the features that would exclude it from being used in an IRS audit. We have an individual version. We have a business and bookkeeping version, basically QuickBooks for crypto. We have an accountant version. We're building more and more onto it, and we have an audit defense in there. Internally, we don't send you to third parties where we get kickbacks like a lot of these other products, right? Look, find our partners. What do you do? They're going to use your product. Your product sucks. It's not going to do me any good. right? We handle it internally because we have the licenses. We're tax attorneys, we're enrolled agents, we're CPAs. We have the licenses to represent you in front of the IRS. And I can literally sit, if I need to sit in front of tax court and manually calculate your data for them, I can. They will get sick of it because 20,000 transactions manually calculating takes me about 2 weeks. They don't want to do that. But I can and show my work, right? I can show my work and I can prove why I'm right and they're wrong. And that's the key, right? Like what's it called? Some people say I have this savior syndrome, right? I can't stand unfairness. I never could. From when I was little, I can't stand unfairness. And this is just unfair, right? People are being set up for failure. And the people who are supposed to protect us from the greed, they're not doing anything. And so I don't know how much trouble I'm going to get in for opening my mouth, you know, at one point or another, but I gave them the opportunity. I gave them everything. I didn't hide it.
This video podcast is sponsored by Monzon Wealth. The content in this podcast is for informational purposes only and should not be considered financial advice. We do not endorse specific products or services. Past performance does not guarantee future results. The opinions expressed are those of the host and guests, not the podcast sponsor.
It is crucial to consult with a qualified financial advisor or professional who can provide advice tailored to your specific needs before making any financial decisions, investments, or taking any other actions. If you are seeking specified help, you can reach out to Chris at monzonwealth.com.